RIN TV coverage of the 2015 European Insurance Forum is brought to you by the Dublin International Insurance and Management Association. The Irish economy has recovered very well over the past several years. In fact, by many measures, it now outpaces the rest of the European Union. We had the opportunity to speak with the Irish Minister of State Simon Harris from the Departments of Finance, Public Expenditure and Reform about the recovery and the vision for the future of Ireland's financial services sector. Here are the highlights.
I think no matter what economic metric you apply to the Irish economy, there's no doubt that it's moving in the right direction. We've gone from a scenario whereby we had a Troika bailout, we were reliant on IMF funds, to a scenario whereby we've bid goodbye to the Troika. We had unemployment heading towards 15%. It's now back at 10% and heading towards single digits. We plan on having full employment in Ireland by 2018, and we will have created 100,000 new jobs in the lifetime of this government very shortly. People are getting back to work. Our economy was the fastest growing economy in Europe last year at 4.8%, and it's predicted again to be the fastest growing economy in Europe this year. So the Irish economy is back on track. The job isn't finished, but we're heading towards full employment and stable, sustainable growth of 3.5% right into the future. I attribute the economic recovery in Ireland to three key ingredients, if you like. One, the resilience of the Irish people, who got on with the job at hand, who knew that there was a body of work that needed to be done by their government, and who got on with it in true Irish style. I attribute it to the policies pursued by government, which were pro-growth. We have proven in Ireland that it is possible to consolidate your economic situation whilst growing your economy by pursuing pro-job policies, pro-growth policies. We put in place a number of structural reforms to help people in business, to help people interacting with our social welfare system, and to help get people back to work. And thirdly, the success of the government in negotiating with our international partners, be they in the EU or the IMF, in terms of reducing the burden of Irish debt by restructuring payment options, which has improved the cash flow of Ireland by about €40 billion over the next 10 years. I think they have been the three key ingredients. Ireland is very actively participating in the OECD BEPS process. We have always said that in terms of international taxation issues, it is important that these are agreed at an international level. A small country on the periphery of Europe can solve global issues on its own, and therefore we've been actively participating in the process. Ireland has nothing to fear from the process because Ireland's foreign direct investment and its industry is substantive. It is industry with a substance behind it. It is making a tangible impact on local communities and on the country in terms of employment and in terms of tax revenue. Having said that, there have been concerns from time to time expressed by different sectors, and Ireland is actively engaging in the process. I expect a new paper to be very shortly issued in relation to the OECD BEPS process, and I think that will have reflected some of the concerns of our insurance industry. It's very difficult to be emphatic on any question in relation to regulation. I think if we've learned anything over the last number of years in relation to the global economic crisis and indeed the economic crisis that my own country has endured, it is that regulation needs to be constantly kept under review. There is never any room for complacency. We also need to ensure, though, that alongside robust regulatory structures, you have business responsive regulation. You have it easy for business to access regulatory information, to establish factual situations with regulatory authorities. So I think it would be a foolish government minister who would criticise regulation. Regulation is absolutely critical. The insurance industry knows that and shares that view as well. We've recently launched our new IFS 2020, Ireland's government strategy to grow the international financial services sector. Back at the end of the 1980s, there were about 60 people working in IFS in Ireland. Last year, there were 35,000 people directly employed in the sector. IFS 2020 aims to grow direct employment in this sector by a further 10,000 by the end of 2019. It aims to put in place an education and skills group to ensure that we can continue to have the skilled workforce that the industry requires. It sets up new structures for industry and government to engage on the key issues and challenges facing industry. I really hope and expect that by the end of IFS 2020, Team Ireland will be coordinated, and we will have our message loudly and clearly that Ireland is a good place to do business in, and our sector will have gone from strength to strength. It's also important to note that the Irish international financial services sector, yes, has a number of foreign multinationals, and that's really important, but it also now has a very strong indigenous sector. About a quarter of the jobs in IFS in Ireland are now in Irish-owned companies, and I'd like to continue to see a growth of those companies, particularly in the area of fintech, which I think is an exciting policy area for the next few years.
For more of our coverage of the 2015 European Insurance Forum, visit the DEMA website or the special 2015 EIF channel in the RIN TV On Demand library.